Okay, we are recording as well, so there will be a replay of this. But again, thank you all for joining us this morning. This is the Royalty Exchange Office Hours live Q&A session. We hold these sessions every month for both new and existing investors alike to answer all of your questions and maybe provide a little bit of updates on some of the things that are happening here at Royalty Exchange. My name is Anthony Bruno. I'm Director of Communications. With us from Royalty Exchange on the webinar are Rob Bernard, who is our Chief Counsel, and Dayton O'Connor, who is our Head Financial Analyst. And between the three of us, we hope to be able to answer all of your questions. Before we get started, a couple of quick housekeeping notes. In order for you to, if you have questions, please do leave them in the Q&A button at the bottom of your screen. So at the bottom of the Zoom screen, you'll see a number of commands. One of them says Q&A. That is the best way to leave your question. That ensures that I can see it and ask it to the panel here and have it addressed. The other features are a little bit harder for me to monitor as we're having a live webinar, so I may not see questions that are entered in via chat, for instance, or other formats. So please do just simply type in your question into the Q&A. We'll get to it either immediately if it's part of the ongoing conversation, or it might be something that we address as we move through the process. Generally, the way these things work is most of you have left questions in advance upon registering for the webinar. So we're going to run through those first, and then we'll address those that were left during the live Q&A portion of things. So that's basically the rundown. That's how it works. So let's see here. I think to start with today, what I wanted to do was just quickly introduce a couple of newer features and formats that we've got on Royalty Exchange, and then we'll kind of get into the questions from there. So the first thing I wanted to do, and I'm going to try to share my screen without completely wrecking the train here, is introduce the new feature that we've added in the last 2 weeks called Counteroffers. So I'm going to share my screen real quick. Bear with me for a moment as I get this called up. Here we go. All right, can you guys all see my counteroffer screen? Great. So this is a blog post that we published late last month, where we introduced counteroffers on the exchange. So basically what this means is that until this feature, what would happen is any of you who are investors who made an offer on an asset on the exchange would leave an offer, and that offer would either be accepted, or it would be declined, or potentially would be ignored. What the counteroffer feature does is it allows the owner of the asset that you've made an offer on to respond back with, as the name implies, a counteroffer with a different price, and that can kind of go back and forth. And if as an investor, if you own an asset that is also listed on the exchange as a secondary market asset, you can do the same thing. If someone makes an offer for the asset that you own, you're more than welcome to counter, saying, actually, this is a price that I would potentially be willing to part with it as well. So this is what it looks like. I'm going to show you this part right here. This is basically the history. So as all investors are in the listing, basically, you will be able to see in the offer history the counter offer back and forth between the owner and the investor. And that's for transparency purposes. We believe everyone should have the opportunity to kind of have a sense of how offers are made and what's being accepted and what's being counter offered and so on. However, the one caveat is that the counter offer made to the investor is good to that investor only. So if you're the investor who made an offer and you receive a counter offer, you can accept that counter offer because it's limited to you. However, any other investor can see that counter offer and can make a new offer at or above that price. So it could still be a very dynamic offer, sort of live bidding situation. But basically, the counter offer, when it's made, is made to the original investor making the original offer. That's basically it. That's the blog post here. I'm going to show you real quickly, if I can, a example of this. So here's an example of how this was rolled out. This is an actual asset that was sold recently. You can see here, the original offer was made at 55,000, and it kind of went back and forth between the two until it got up to 60. And these are the different counter offers made between the two parties, the owner and the investor. So that's the counter offer feature. If you have any questions, please feel free to leave them in the Q&A. We'll get to those here in a moment. But that was one thing I wanted to quickly bring up. The next new thing I wanted to bring up is a new type of asset that we now have. I'm going to go ahead and call a recent one up right now. We've done these sporadically in the past, and I think you're going to start seeing them more regularly now, which are what are called fixed returns. So these are assets where you are able to buy a known set dollar amount return from the asset once you acquire it. Okay, so in this case, for instance, this was for a catalog that was a fixed return of $571,000. So whatever you paid for it, you will continue to collect the royalties for that asset until the sum of $571,000 was reached, at which point the investment would be over. You would have gotten your return, and the seller gets the royalty stream back. It's not time-based, it's dollar amount return based. And these are going, we do these for a number of different assets here and there, but we have a program now with a partner who is a digital distributor called Vidya. They work with artists, and so what you're investing in for the most part with these are sound recording assets as distributed by the digital distributor on behalf of the artist, and they are offering it as sort of as an advanced feature for their artists that are using their platform. And so what you'll see is more of these recording artists adding their assets to the exchange and to the auction house, and allow you to bid on them that way. I'm going to let Dayton explain a little bit more detail about some of the math, I guess, behind it. But generally speaking, the adding a fixed return, the intent is to allow investors to consider and acquire sound recording assets that are a little earlier in their lifespan than would normally appear elsewhere on the marketplace. It's just more of a transparency risk thing. Dayton, do you want to talk a little bit about the valuation background behind these and how the fixed return kind of changed up from our normal assets that we list?
Sure. So you covered a lot of ground in that. The benefit of this kind of deal structure, it allows investors the opportunity to invest in these very young catalogs. If you're looking at the description here, you can see Money Moo. It's a dollar age of 0.52 years. He wouldn't really be appropriate to bring on to our platform and try to sell his catalog as an auction, because he just doesn't have the historic track record right now to really be appropriate. So with this new kind of deal structure, with this fixed return, it gives investors the opportunity to invest in this kind of income stream. And the only risk vector that's baked in here is the time period at which you expect to be paid back for your investment.
I'm going to call up, in this case, we list some theoretical return scenarios, and we just try to put some guardrails on it. We put a conservative one, which is middle of the road, which is what we generally expect would be the time frame based on the analysis of the earnings so far. But we also list, a more aggressive and a less aggressive model as well. So you can see, okay, you could take anywhere between, I have to take a little closer look at this one, but it could take anywhere from, in this case, between 17 months on the best case scenario to as long as 44 months on the most conservative scenario. Again, could take less time, could take more time, but these are just sort of the guardrails that we kind of present based on analysis of how the earnings have done, just so you can kind of get a sense of the time frame involved. And these will all have future listings will have similar analysis to them. So, all right, those are the two new things I wanted to share with you all briefly. I think quickly I'll take one question that I see came up here in the Q&A, which is regarding the counteroffer feature. And the question is the only difference between counteroffer feature and bidding in auctions is that the seller can't participate in the price setting? Not exactly. So in an auction standpoint, in the auction format rather, the seller sets the starting price, and the starting price is basically the minimum amount that the seller will accept for sale. If it gets one bid at the opening price and that's it, auction's over, and they have to kind of accept that as the price. With the exchange, excuse me, the seller can set a price or not set a list price. You've seen some listings where sellers don't set a list price. They just want to kind of see what people are going to offer, and they have the ability to accept the offer that they want. If they do set a list price and someone accepts the list price, then that becomes an automatic sale. Anything below that list price, though, the seller has the opportunity to consider, and again, they can either ignore it, decline it, or make the counteroffer. So it allows the seller to provide some feedback, but the point is that there's not a live auction where the seller has to accept whatever the closing price is. The seller can still determine what price they will accept before closing the sale up to the point of the list price. So that would be the difference. I hope that made sense. If you have any other, if that didn't make sense, if you have any further questions on that, please do leave them. So now I am going to switch over to the questions that were left in advance, and we'll kind of run through all of these. Starting at the top, the questions are regarding opportunities to invest in royalties between the $3,000 to $5,000 range, and if, a question as to whether or not 2 or more investors can jointly invest in a project. So we get a lot of those questions, particularly from new investors that are looking for what we might call entry-level investment categories. And yes, there are occasionally assets listed, particularly on the exchange, at a $5,000 or below price point. They do get snatched up very, very quickly because probably the largest group of investors are in that range, and so they tend to get snatched up right away. But they do appear, and it's just a matter of filtering the secondary. I'm sorry, the exchange to the prices that to the the price range that you're comfortable investing in, and then choosing from those that are available to you. In terms of the 2 or more investors jointly investing, no, we have one buyer, one seller format throughout outside of our private syndicates. That's a matter of complying with SEC law regarding securitization of assets. So once you start getting more than one person investing in the same asset, it kicks in security regulations, and that's something that we're not getting involved with on the platform. It's what we want to say. Moving on, are there physical checks that you collect as an investor, or is it all electronic? I believe it's, I don't know, Rob, you want to answer that one? I think it's all electronic, correct?
We have a couple folks that want to receive checks, but when Royalty Exchange administers, we have a system called Payment Hub, and you can set up direct deposits there. If you don't set up direct deposit, then we'll send out checks.
Great. And then in terms of the payment, does the payment list the investor's name or BMI or Ascap, depending on the distributor? How does that work?
So the payment will almost always come from Royalty Exchange. So Royalty Exchange will act as the administrator. We'll collect all the payments every quarter from the underlying distributor, Ascap, BMI. We'll receive all those payments, filter them out, determine which investor is entitled to those, and then send them out. So the payment you receive will come from Royalty Exchange.
Okay, great. Next question. Are these prices a one-time price to pay and then we own the royalties or a portion of the royalties? Yes. So whatever royalty portion is listed, once you buy it, it's a one-time fee. You've paid for that royalty, and then now you collect those royalties. There is some fluctuation in the time frame, and that'll be listed when you acquire the asset. It's either life of rights or 10-year term, or as we noted earlier, a fixed term return. But anyway, you don't pay anything after the fact. You pay once, you collect the royalties for as long as the ownership time frame was listed. Let's see. Being new to this, so as a new investor is trying to understand the economics, can you discuss one transaction, the beginning to end? I think so. Economics is kind of a broad area. So, but basically the process beginning to end is you look through the marketplace, whether it's an auction or a direct listing. You participate in an auction, and potentially, you have the highest bid and you win it, or you are sending offers on the exchange and your offer is accepted. You've bought the royalty asset. We handle the transfer of funds involved, so that the owner of the asset will collect the funds that you've made available. You have two business days to submit the funds equal to the amount that you've made the offer on to buy the asset. Once that's done, we transfer the funds, we handle all the paperwork, and you then own the royalty stream. As Rob mentioned, we administer the payment on your behalf through the distributor, so that it's aggregated. Some people own 3 or 4 different assets, and we can aggregate all of those payments for you, and then you collect the royalties going forward. The economics of it, I'm not really sure where that goes in terms of what you're looking for, but basically, you own the asset, you collect the royalties that it earns, and at any point, should you no longer want the asset, you can sell it also on the exchange as a secondary market asset, and receive whatever funds it is that you sell it for, to complement the entire return. I think that answers the questions. Dayton or Rob, do you guys want to jump in on that at all? I'm just trying to make it as simple as possible.
Yeah.
Okay. There's 2 questions here about buying royalties under an LLC. Yes. Rob, you want to add any color to that? But it's basically yes, you can buy through an LLC.
Yeah, I mean, you can sign up when you sign up as an investor on Royalty Exchange. You can say that you're going to purchase through an LLC, and that's who will be on the purchase agreement, and that's who will pay money to if that's what you want to do.
Okay. Another question about buying part of a catalog regarding the whole thing. Same answer. You're buying the whole thing with us, basically. Can we expect a broader exchange offer in the near future? And where are the biggest risks of investing? So in terms of a broader exchange offer, I'm not sure what that means. We are constantly sourcing new catalogs to add to the marketplace for investors to bid on. And so we're looking to increase the volume of the assets available to you. In terms of how much broader beyond that, nothing new announced at this time, but we're always looking to evolve the marketplace, as we just saw with the addition of the exchange. In terms of the biggest risks of investing in Royalty Exchange, there's a number of different risks that we try to mitigate. We do some basic due diligence and vetting of assets before they're added to the marketplace to ensure there's no things like tax liens or other encumbrances on the income that you would be due to receive. And if there are, we don't even really, we try to head those up. I think very mostly do head those up before they even make it to the marketplace. The risks are basically that the payment and the income stream that you generate from a royalty is based on usage. And so the risk is that the usage may fall dramatically below what its historical average usage has been. And so that's always a risk. Why that might happen could be a number of different reasons. Tastes change, artist gets canceled. In the past, there's been some technology disruptions in the music industry, but I think we've kind of gotten past that, with streaming really taking hold as the dominant, most stable force. So, those are the different components that you want to, take a look at. So it really comes down to usage. And that's really the benefit of the royalty as an asset class, is that the income that that the asset generates is based on usage and licensing. It's not based on other factors like stock market fluctuation and whatnot. So it's an uncorrelated asset, and that's kind of the whole point. Dayton or Rob, you guys want to jump in on any other risks that we might want to point out?
No, I mean, I think when you're buying royalties, you're buying them from a bunch of different, from a different distributor. So I think trying to understand what the actual types of royalties is that you're buying, who's paying them, and making sure you're comfortable with that. I think kind of a risk is jumping in and not really understanding what it is that you're buying.
Okay, cool. You know what? So we're talking about risk, and there's a question that came in live. I want to address it right now, which is what we always get, which is what happens in the worst case scenario when Royalty Exchange goes out of business? What happens to the assets? Rob, you've answered this one a million times, so I know you got it.
Yeah. So when you sign up with the Royalty Exchange, you'll sign an accounting agreement when you purchase an asset, and that accounting agreement allows Royalty Exchange to collect the royalties on your behalf. You're still the owner of the asset. The purchase agreement that you have says that you own the rights to that royalty stream. So if Royalty Exchange were to go out of business, our accounting agreement requires us to find a third-party accountant to go and handle essentially the function of collecting and paying out royalties like we're doing now.
So essentially, your collection can take place independent of the status of Royalty Exchange as an entity.
Right.
All right, moving on. Question is, can we see historical data revenue beyond the few quarters displayed on the website? Yes, that would be in the raw data tab. There's a link in every listing called raw data. If you select that, you download a spreadsheet that lists as much data as we have available for the asset, generally more than 3 years if it's an older than 3-year catalog. Can you participate from outside of the USA and Canada? Absolutely. We have investors from all over the world that have bought and collected assets. So not a problem. Can you explain the difference between the regular auction and the aftermarket auction? So basically the marketplace consists of two formats, essentially. One is the auction house, and the auctions are when there's a listing. It starts off with a list price. The minute someone makes an opening bid at that opening price, the auction starts. The auction lasts typically around 3 days, in which case people can bid as much as they want until the auction ends. We do have a rule where if any bid that is placed within the last 5 minutes of the auction resets the countdown to 5 more minutes to allow everyone the opportunity to place the bids that they want to place. Once the auction ends, the final highest bid wins the asset, and the transaction then takes place from there. The second part of the marketplace is what is called the exchange, and the exchange consists of it's more of a listing of assets. They're not live auctions. They're static listings that allow you to make an offer at whatever price you choose to make that offer, to the owner of the asset. Those assets are listed with many are listed with what's called the list price. And if you just accept that list price, boom, you've bought it. It's like a buy it now button. Okay. Or you can offer below that list price to see if the owner will consider that lower price. In some cases, they may just say yes and sell it to you at that lower price. They may make a counter offer with the new counter offer feature that I outlined earlier, or they may just flat out decline it, or they may completely ignore it. And it's worth noting that there's also they have some floors that they can set on their assets that they won't even see. They'll just automatically decline anything that's below, a certain amount. So the offers have to be, I guess, could be both the offers and the list prices need to be in sort of a realistic frame for both investors and buyers to, sellers and buyers to really negotiate on those lines. But those are the basic two areas. Now, you mentioned aftermarket auction, so I want to kind of make that a little more clear. The exchange has two kinds of listings on it. One are what's basically called secondary market assets. That means they're assets that investors have already bought on the exchange, on the marketplace, either through the auction house or otherwise, but they're owned by other investors who bought those through Royalty Exchange, and now they're listed for potential resale. Some investors completely intend to hang on to those assets and not sell them, but they're still listed because they like to, field offers. If you offer someone enough money, they'll sell anything. So they're there for that consideration purpose. Other listings are what's called direct listings. These are listings from artists or other creators or rights holders that come in new to Royalty Exchange and list them for sale as a static listing on the exchange rather than holding an auction. Auctions and listings are both, perfectly valid ways to sell royalties. Some rights holders want to have more control over the exact price at which they sell, and that's why they would have a direct listing to express that option. Because an auction, when you do an auction, you're agreeing to whatever the final price is, whatever that might be. You can't say at the end of the auction, oh no, that's too low, I don't want it. That's not how that works. So the direct listing is another option for them. So those are the two basic differences. It's a question here about commission rates. Generally, our commission rate is 15%. It varies. It's lower for, say, like the fixed term auctions through the Vidya deal. I believe there's a lower commission rate of closer to 10%. Secondary market, like if you're an investor who owns an asset and then you list it on the exchange to sell it, I believe that's a lower take rate as well. Rob, I'm actually not sure what that is. Do you know what that is?
Yeah, it depends on if you're all access investor. And I think it's somewhere around 6 to 8%.
For all access?
I think it's like 6.4 for all access and maybe 8 otherwise.
Right. And the reason it's being is that there's assets that we've already done the work of vetting and going through all the work of, ensuring transfer of ownership and funds and things like that. Once that work's done, if it's sold again, it requires less effort on our end. So that for the take rate falls. Can you talk about how royalty income and the sale of royalties are taxed, as well as tax optimization strategies? Rob?
Yeah, so this is decidedly not tax advice. You should always consult with your own tax advisor on the situation. But in general, there's a couple ways. I mean, really, royalty income is just ordinary income. That's how it's taxed. You'll receive a 1099 INT or MISC, I think, with a royalty box on it. And how it's reported. You also have options on whether you amortize a purchase as an investor. That can typically be done over 10 years or so with a couple different methods. One's just straight line, and then one's an income forecast method. I don't want to get too deep into that now, but you can certainly look that up, and I would certainly recommend chatting with your tax advisor on that as well.
Yeah, and in fact, I did post an older article to the blog, the Investor Resources blog, that lists sort of how amortization of royalties could work based on a conversation we've had with some tax advisors in the past. I'm going to share that right now to the whole group here. Bear with me 1 second as I figure out how to use these multiple buttons. But to everyone, here we go. So here's a link to a blog post. Here we go. So I've just shared a link to a blog post that talks about amortizing royalties, and if that could help you quite a bit, I hope. So moving on. Do investors establish and residents outside the US need to bear anything in mind investing through Royalty Exchange? Rob?
Yeah, so you'll want to check your tax treaty, your country's tax treaty with the U.S. Depending on what that says, Royalty Exchange as the collector and distributor of royalties is a withholding agent for U.S. tax law. So depending on what that treaty says, we would have to, some countries at zero. If we don't receive a W-8 or don't claim a tax treaty, then we have to withhold 30% of the income that we pay out as a withholding agent. You'll also want to check on when you actually fund your purchases. A lot of times we'll see that your bank charges an international tax wire. It can be up to like $50, I think. So we'll notice that for some of our foreign investors as well. But if you purchase something, we'll always ask for the appropriate W-8 form so we can handle the U.S. taxation appropriately.
All right, thank you. Next question, does the platform deal with any type of copyright royalty, mechanical, neighboring, etc.? The short answer is yes. There are very few that we don't deal with very regularly. One might be, for instance, the digital performance royalty for the sound recording, for instance. It's a very specific type of royalty. We have some challenges in working with the entities charged with distributing that royalty in order to ensure that a new owner would be able to collect those. Once we get past that, that'll be another thing that's added. But essentially, yes, you name, publishing, sound recording royalties, mechanical royalties, public performance royalties, all of these are royalties that we are able to offer, and you will see them listed on each listing precisely which royalty stream it is that you're able to invest in. The next question is historical returns. I love a good succinct question. So historical returns, we do a review. When I say we, Dayton does it, and I ask him a lot of questions about it. The last one we did was for the last 6 months of 2020. I believe the average came out to be just over 10%, with as high as, Dayton, why don't you just jump in there? You did the analysis. Do you want to kind of just real briefly break down kind of what we came up with? You're on mute, my friend.
Sorry about that, folks. Yeah, at a high level, we were looking at the returns over 2020 on average. The return on investment was about 10.6% for the year. So 10-year returns, it's around 9% for life of rights. It was a little bit over 13%. And that's tracking overall with the returns that we're seeing over the past couple of years on the platform.
Yeah, it's worth noting, thank you for breaking that down, Dayton, that, we do have, a 10-year term asset naturally is going to have a different return rate than a life of rights asset, just because it's a shorter time frame. So we blend it together so you kind of just see a nice, easy overall figure. But then depending on which ones you're buying, you'll see the different types of returns. So we recently put out a report. We do a monthly analysis of different things that we present monthly to our All Access Investor members. And what I've started doing is starting to post those for all members to view after initial publication to All Access. So this data will be available in the next month or so. And I'm talking about granular data. So I think you should look, keep an eye on the blog and you'll see that. How can a beginner investor learn to take it one step at a time? I would say by taking it one step at a time. It's something that what I would recommend doing is either registering to watch an auction, or also on the exchange, select the certain assets that you find interesting, save them, and then you'll see the activity around them. And I think it's worth taking some time to see how people are bidding, how sellers are accepting offers, what are the multiples that are being accepted and trading at, and things like that. And so take some time to do things that way. I also would recommend going to the blog on the investor resources section. There are a number of guides that I actually just published, updated basically, and really take your time to kind of read through those so you're understanding the different types of royalties, how those different types of royalties earn money, that sort of thing. It's really important to understand the underlying assets that you're getting involved in before you allocate any capital to it whatsoever. And very, very shortly, we're also going to have an update to what we called our ultimate guide. I think I'm renaming it the beginner's guide because it's really more what it is. But the beginner's guide to buying music royalties, once that's published, I'm going to send it to all registered investors on this call and otherwise that we have on the entire platform, so you can kind of read an updated version of the entire process. And I would keep an eye out for that. There's another question about how you put your own songs in the marketplace. That's another call. But basically, if you go to our site and you go to the Raise Money page, there's a link where you can connect your royalty paying account to our system that allows us to conduct an analysis and provide an estimate and even potentially present you with instant offers. I would go through that process. This is more of an investor Q&A call. So let's see. I have to ask this just because I thought it was interesting. There was a question about how to acquire Ethereum or Ether royalties. I don't know, not with us. We sell music royalties and other intellectual property royalties. How do I know which royalties pay out quarterly and monthly? Each listing denotes the distribution time frame in it. So there are different timeframes for distribution for different types of royalties and different kinds of distributors. They vary. It's generally monthly or quarterly, to be honest. But the listing itself will say this is the distribution time frame. So you will know precisely for each listing what that distribution time frame is. Okay, how do I register the songs with BMI or Ascap or Sound Exchange so I get payments directly? Robert?
Yeah, so that's not your job. So anything that's on Royalty Exchange will have by nature already been registered with the appropriate societies by the publisher. So there's always going to be a publisher or at least a publishing administrator already on file who has already registered the songs. You know, the reason that you're seeing it on Royalty Exchange is because it has a history of earnings with those organizations. So the songs are registered. From a licensing perspective, you are collecting the income passively. So those publishers, it's their job to monetize the asset. It's the distributor's job to collect and then pay. Royalty Exchange receives those royalties on your behalf, and then we pay you.
There you go. The next question is, how do you bid on songs? Good question. Basically, on our marketplace, let's go with the auction house first. When there's a listing and when there's a live auction, there's a big green button that says watch your bid. You push that button. That will basically register you to watch the auction. And if you want to place a bid, same button. You could place a bid by pushing the bid button. Now, if you're a new investor to our platform, it's free to create an account and it's free to bid on auctions. But if you actually want to make an offer or place a bid, there is a short verification process that you do need to go through so that we ensure that you understand that what you are offering is a legally binding bid. So if you place a bid in an auction or you place an offer on the exchange and either that bid or that offer is accepted and you won the auction or won the listing, you are obligated to pay the amount that you actually listed. It's not like a pretend bid. It's a real bid that you are legally obligated to complete. So the verification process, just make sure that all of that is clear. We've actually just updated the verification process, so we hope will take far less time than it has in the past. And I apologize for those of you that may have been in the waiting queue trying to get yourself verified so you can actually bid. I believe we've resolved that issue now. If not, I would love to hear about it. You could always give us feedback at investors@royaltyexchange.com. But basically, there it is. Auction house, you place a button, so you place bid. On the exchange, you look at the listing, there's a button there, make an offer. You click that button, there's a pop-up screen, you walk through the steps, that's how you make the offer. We answered the tax question already. Here's a question, I think, for Dayton. How does the appreciation process work for music royalties?
I just wanted some clarification on that for
Sure.
what we're referring to when we say appreciation.
Well, I guess, I mean, I don't know because I'm not the person who asked the question would have to clarify that a little bit, but I think we could talk a little bit about just the ongoing earnings. How would you either forecast earnings or, do they grow? Do they increase in value? Do they decrease in value? What are sort of the trends that you would say just on a general overall basis? Obviously it differs by asset to asset.
Right. And I think that's at the top of evaluating any royalty asset or any music IP. The short answer is it depends. You're going to take a look at the catalog and you're going to see, okay, how long has this been earning for? What's the dollar age? What's the genre of music? And what are the kind of sources that are generating the royalties that are associated with the asset? I would expect something that has a higher dollar age with a lot of performances at radio, then starting to get more performances at streaming. That would have a much longer tail of distributions and likely be a more valuable asset over a longer period of time than, say, an asset where you were getting a lot of that money from sync licenses, because that's a source of income and a source of performances that's really dependent on whatever the tastes of the day are and their idiosyncratic uses, where something might get placed in a commercial or a TV show, have a lot of significant payouts tied with that use, but it's not recurring.
I think it's a good
So
overview.
there's factors that play in. It's the genre, it's the trend in the asset. What I'd expect to see over time is if something has been earning for a while, it's going to continue earning.
Yeah, the biggest factor we always point to is dollar age. And I will also point listeners again to the investor blog again, because there is in the investor guide section, one of the lessons, or I guess, or the articles is putting a value on royalties, and it really gets into all these details in far greater granularity. So I would encourage you to read those as well. Generally, it's not unexpected to see royalties somewhat decline or decay over time, right? It's just a matter of at what rate, okay? And that's something that we always try to take a look at. A new release is going to earn most of its income in the early, years, months of the release, and then it'll usually sharply fall off after around 3 years, let's call it. Okay, that's normal. That's pretty much every song in the world, right? And then so what we tend to do is we tend to emphasize songs that have been around for more than 3 years, so that you're able to evaluate the earnings after it reaches that stability point, and then try to get a sense of exactly how stable that is on a year-over-year basis. And then the longer the number of years you have to evaluate, the more informed of a decision you can make, which adjusts your risk profile as an investment. So long answer for a complicated question. Another question about the tax structure, which we addressed. The question was, do I need an S Corporate Llc? You don't need one. You can invest as an individual, but if you have an LLC, you can. So another question is, how is the money paid back, and at what length of time? The money is paid back just by you. Essentially, royalties are collected based on the distributor of those royalties at a set time frame. And you will, as an owner of the royalty asset that you've acquired, you will collect those royalties as they're distributed. The length of time depends on the term of the investment that you bought. Again, we do have some assets that are only a 10-year term asset, so you will own those for the 10 years. You will collect the royalties for 10 years, after which the royalties revert back to the owner. There are others that we call life of rights. Life of rights asset is one that you will collect royalties for the lifetime of the copyright. In music, the copyright is the lifetime of the last surviving author of the work plus an additional 70 years. So it can be quite a long time. That's the short answer. How do I know if the royalty pick is a good one? I think we've kind of addressed that a little bit in some of the analysis answers that we provided earlier. And again, I will point to the valuation article in the blog for you to kind of read in a little more detail. And then the third question in this question was whether or not there's a membership price. Short answer is no. Membership is free, and it is free to bid and make offers on the marketplace once you go through the free verification process. There is a membership tier that we offer, a premium tier called All Access Membership that carries with it a number of benefits that is entirely optional, but it is not required to participate on the marketplace. And since we're kind of in this space of question, I'll just add in terms of fees. If you do buy a royalty, there is a one-time fee of 1% of the final price, sale price, which is waived if you're an all access member. Excuse me. All right. So moving on. How long do you hold on to a royalty? I think I basically just got into that. Oh, there's another question here that I missed. How likely is it that the last 12 months value of older songs reflect or don't reflect current trends? Dayton, I'll let you address that one again, I think.
Yeah, sure. Again, with any sort of catalog valuation question like this, the short answer is always going to be it depends. The long answer is any song or catalog is not going to be immune from the changes in consumption habits. There are some genres that are playing catch up relative to others. Country is still a little bit behind, say, pop, rock, and hip hop in terms of the moving away from physical analog formats over to digital and streaming. But every song is going to follow the same general contour in terms of moving on to like the digital streaming services onto those platforms. I would be very surprised to see a catalog that has really idiosyncratic listening habits, for example. But we take a look at that when we're doing our evaluations for any of the auctions that we're putting up on the site.
Great. So I'm just gonna trying to manage the audio settings here a little bit more finely to help with the recording. So don't take it offense if I mute your panelists here. You can always unmute yourself when I call on you. See here, how often are our assets added to the exchange? As we get them, we generally have, you know, at least one a week generally. Auctions, what you'll find, I think this addressed the questions that are somewhere elsewhere in the list here. We would generally have between 3 to 5 auctions a week back when that was the only format for investing. Now that we've added direct listings, we've seen a spread of those between auctions and new listings added to the marketplace. Generally, you're going to see between, again, at least one a week. Sometimes we could have as many as 5 to 10. I mean, it kind of comes in cycles sometimes, but those are in terms of new assets that are added. The exchange does have, I think, over 350 now, I guess, archived assets that are owned by other investors that you're still free to browse and make an offer on. So those exist and they're always there. But in terms of new ones being added, I would say generally on average around 3 to 5 a week or so if we're having a good stretch of it. So it just kind of depends on the volume. Sometimes things take a little bit longer to get through due diligence than others. So the pipeline is always rather active. It's just a matter of getting them across the finish line to public viewing. That takes a little more time. How has Royalty Exchange been affected by the pandemic economically and also in terms of royalty revenues? Royalty Exchange as a company really hasn't been affected by the pandemic economically in terms of our business. Our activity has remained largely steady, and investor interest has actually gone through the roof. We've had far more investor activity and interest since the pandemic started than prior to that. And with artist interest, it's been about, you know, the same sort of slow ramp up that we've been seeing. In terms of song royalty revenues, kind of complicated question. I'm going to give a short answer. I'm going to let Dayton chime in because I know he has a thought on this as well. Basically, it hasn't really had a massive material impact on song revenues. Okay, it kind of depends on which royalty stream you're talking about. But basically, the pandemic largely affected live music, shows, concerts. And those royalties and the revenues from those events are not something that we trade in on the marketplace. So it hasn't had as big an impact with the investors buying music royalties. Now, there has been some impact in, say, public performance royalties as paid by like bars and restaurants, but as a factor of the bars and restaurants being closed and not accepting, you know, customers and whatnot. So on an overall basis, that has affected the organizations charged with collecting those revenues, mostly in terms of timing. But for the specific types of assets that we make available on Royalty Exchange, it was a very, very, very small, less than 1% on average of the revenue that those assets collected. So we really haven't seen a huge material impact on returns gained so far. That said, there's a bit of a lag between when those royalties are collected and when they're distributed, and I don't think we've seen fully the effect of that just yet. We probably will. Actually, Dayton's the expert on this, and I'm going to stop talking and let him give a little more clarity on it.
Yeah, to that point, I would say at a very high level, historically, not a huge impact. You're seeing more moves to streaming along with the end of live revenues. I think there's a question of the trends that have taken place during COVID, the changes in listener habits, how that's going to be felt in the next few years. We're expecting a return to live, obviously, but is streaming going to continue to grow at this rapid rate? Is there going to be this, continued adoption of that? That being said, it's entirely possible because of the way that the different distributors that we work with can account for royalties in terms of when they receive the revenue for different types of licenses and when they pay that out in their distribution. We may not be quite out of the woods yet in terms of seeing when COVID distribution impacts are going to be felt. That could be occurring through 2021.
Okay. Let's see here. We've got quite a few questions left, so we're gonna keep on going. We'll go over the scheduled time if necessary to answer everyone's questions. I just wanted to give a quick check in that we've got probably like another 20 questions left in advance or so. Plus, I still want to get to the ones that have been left live. So we'll try to be a little shorter with our answers here, particularly me. So quick, Dayton, this one I think is also for you, which is how should one best diversify risk using this kind of asset?
So 2 parts to this question. One, I think it's really elegant about music royalty assets. Depending on the asset you're investing in, that income stream is already diversified. You could acquire a catalog that's getting revenues from radio, streaming services, film and television, and from international sources. So that's one piece. The other piece that we always talk about with Royalty Exchange, this asset is uncorrelated from the broader market. So higher level macro issues are not impacting music distributions the same way as they are for the rest of the market. And it's also providing a source of yield. So you can consider that when trying to evaluate whether or not investing in music royalties is right for you, depending on what else you're holding in your portfolio.
All right, great. Couple of quick hail of bullets. So we've talked a little bit more about value and risk and the counteroffer process. There's a question here about how Bitcoin will affect the recording industry. I have no idea. We'll see. We're watching it, but right now, no answer for that one. I'm going to skip down here to, I am interested in a detailed explanation of dollar age. What is dollar age? I'm going to give a quick shot, and Dayton, you can jump in if I get anything wrong or if it's unclear. But essentially, dollar age is the average length of time that the royalties earned by a catalog have been earning royalties. So if you had a catalog, for instance, that had 3 songs that were released 2 years ago, and that catalog earned $5,000 last year, you would compare that to another catalog that had 3 songs that were released 10 years ago that also earned $5,000 last year. The catalog of 10-year-old songs that earned the same amount would be considered more valuable than the catalog that was newer. Mainly because if something's been earning for a long period of time, the likelihood of it continuing earning at that same rate is higher. That's a short explanation. Dayton, did you want to?
No, that's perfect.
So that's basically what dollar age is. So it's the age of the dollars earned in the last 12 months. So let's see. Another question about understanding a baseline for royalty payments in a genre over time and whether there's any public resources available. It's an interesting question. I would point to some of the trade associations that do track at least plays and activity by genre. I'm not sure how much it breaks down by value. Dayton, do you know about that?
So what I would want to add to this, you can take a look at different sources of royalty revenue. For example, Ascap and BMI, they both release annual reports. I think that BMI's typically comes out in September and Ascap's is going to come out in May, for example. So organizations like that, they're going to report how much money they made, where that money was coming from, and what the trends that they're seeing over time. So those can be interesting resources that you can take a look at on an ongoing basis to see, what's happening in different parts of the music industry.
And I just jotted down a note for myself to maybe conduct that analysis ourselves and present that on the blog for everyone to read. I think that might be something that people find interesting. Another question here boils down to curiosity around the collection mechanisms of royalties. So real briefly, for every type of royalty stream, there's an entity, an organization of some kind is charged with tracking, collecting, and distributing those royalties based on use. So in sound recordings, for instance, that would largely be the record label or the digital distributor if the artist does not use a record label. On the composition side, it would be the publisher for certain components of that. The publisher would collect and then distribute the royalties through publishing licensing. And on the public performance side, there are what's called PROs, public performing rights organizations, whose sole job it is to track the performance of music and collect the revenue from those who owe it, and then get that to their artists. These are entities that have been around for decades. It's their sole reason for existing, and we work directly with each of those entities when presenting a royalty asset for sale on the site, so that they are then going to redirect the portion that is now due to the new owner. This is what they do. They have whole staffs just to do this. All we do is just change a name on a spreadsheet somewhere that then redirects the royalties. Kate used to work for one of these organizations, so I don't know if you want to add anything to that, but I think that's pretty much the best answer. Okay, great. Question about bidding and/or purchasing process. Okay, so I think we've gone over how to bid. We've gone over the tax and legal necessities, and of course about selling. So yes, you basically bid on the platform. There are some tax implications that we send out tax documents as necessary for your ownership of the asset, and you can always try to resell on the secondary market in the exchange as you like. If you win a bid, how long do you keep the rights? Again, it depends on the lifespan of the investment as noted on the listing. So it's going to be either a 10-year or 30-year or 20-year term, or it's going to be a life of rights asset. And each listing has that listed very much up front. Is royalty exchange a type of mutual monetary exchange between artist and investor that monetarily benefits both? I'm not really sure what that means, but no, I'm going to say we're a marketplace. So people that have royalties to sell, list them on our marketplace, where people who want to buy royalties can discover them and make offers to the owner. And we are the marketplace where those transactions are taking place. That's it. Most royalties are offered post-peak income, correct? So we would expect the curve to have largely flattened out, but what does one look like? Well, that's where so in terms of what the flattened out curve looks like, that's where you would want to look at the royalty history, the earnings history in each listing, because it's going to depend on the asset. You're generally going to see, again, high, peak earnings, it'll fall to a certain plateau, and you're going to kind of want to watch that plateau. The more even that is, the more stable it is. Sometimes it goes up and down. There could be some, like third quarter of a year could be higher than the other quarters for some kind of added distribution component, things like that. But you just want to look at what the 3-year average earnings and earnings distribution rates are, and that's the best way to do it. It will differ by asset. There's no hard answer to that. What are some lower cost, lower risk options for people who want to get started? Again, I would point to the exchange, where you can make an offer that you can control directly to an asset owner at the price point that you most desire. I think we've talked about the factors that affect pricing of catalogs already. The fees, again, there's a premium membership fee if you choose to join all access. Otherwise, it's free to bid and whatnot. And there is a 1% closing fee on every asset to cover the cost of our administrating the payments going forward. We talked about the risks and reselling already, over the new features. This is a good one. What are your thoughts on the new fan-centric SoundCloud royalties? So real quickly, what that means is that SoundCloud, which is the music service, is going to start paying certain assets, not all of this. It's really only for independent music at the moment, but it's going to be paid based on user-centric usage. So take a step back. Most streaming services have the economics of it are such that everyone who pays for the subscription, all their money goes into a big pot. And then what the service does is on whatever the time frame is, like that month, they will say, okay, so this artist got X% of plays, so therefore they're going to get X% of the pot. Artist B got X% of those plays, this artist will get X% of that pot. So it's based on a percentage pro rata basis. So that if you're, for instance, paying $10 a month for Spotify and you only listen to Led Zeppelin that month, Led Zeppelin does not get your full $10. Led Zeppelin gets whatever percentage of your $10 that the overall listenership did for that month. That's how most streaming services work. The fan-centric model that is being asked in the question would be, if you only listen to that one band that month, that band would get all of your subscription fee, less the cut to the service and the label and everything else. So I think it's very interesting. I don't know how much it's going to change how artists collect. I would, it would be nice if it helped the lower tier artists who don't benefit from that volume that, say, the superstars do in terms of the overall percentage of that pie. But I think it's an experiment that we need to watch very closely to see how that actually turns out, because there's theory and then there's reality. I'm a big fan of the user-centric idea. I just need to see how it actually plays out. That's my answer. Dayton, did you have any other thoughts on that one? Rob, I don't mean to include you either. I know that I don't even know how much you've been following that one. So do you have any thoughts on that?
No, I think that I'm definitely gonna be watching it with interest, because I think it's a super cool model. So we'll see how
Exactly.
it works.
It'd be very interesting. There's a question here about why have there been such few new auctions since COVID? Well, it's actually nothing to do with COVID. The fewer new auctions are a direct result of adding direct listings. And so many artists are opting to choose to list their catalog through a direct listing on the exchange than through an auction. And that's been the difference in the auction volume. What's the pipeline outlook like? It says auction product, but I'm going to talk about the pipeline for all of our listings. The pipeline is good. It comes in waves. As we're kind of working through some of the more new coming catalogs, that sometimes slows up things in the pipeline a little bit until we can get them live. But there is I would call it a robust pipeline of new auctions coming in. particularly new listings coming in, not new auctions, new listings coming in. And we are particularly excited about our partnership with Vidya that will bring in more sound recording royalties as distributed by the distributor. I think that's that has a lot of potential that we're really excited to see. Is there a minimum investment? No, but generally, anything below $5,000 is going to be really, really hard to come by, and it's going to go really fast. And then it says here, how does your money grow? You collect royalties on the assets that you buy, and how do you cash out? Again, you can resell on the secondary market in the exchange. This is a good question. When will life of rights Ascap assets be available to list on the exchange? Dayton, do you have any insight on that?
No, I don't, unfortunately.
So, but right now, if I'm correct, the way we've been getting around the life of rights restriction is to offer them as 30-year terms, correct?
Right, and I guess to take a step back, so the reason you don't see a lot of life of rights assets that are paid by Ascap is because Ascap has a policy where in order to irrevocably assign your royalty stream, you had to have made $25,000 in the last year. There's another couple caveats to that, but that's generally what it is. So it would generally be a much larger catalog where the seller would be able to do that. And if it's smaller than that, we'll offer those as a 30-year term. That's how we handle those. But I guess to see more of them, it would have to be either a songwriter who has met the threshold or Ascap to change their policy.
Okay, great. So I didn't see that you were noting yourself to answer that one. So another question here is, why aren't the artists offering the copyrights? It's a good question. I guess mainly in many cases, they don't actually own the copyrights to offer. The way it works in the music industry is that when you sign with the record label owns the copyright and pays the artist a percentage of the royalties collected based on their contract. In a publishing agreement, it's very similar. Once you sign a deal with the publisher owns the copyright and then pays the songwriter based on the deal, typically 50-50. And so that's generally how it works. We do sometimes offer the copyrights available, but if the copyrights were available, that means the investor then owns the copyright and then would be responsible for exploiting that copyright, which is to ensure that it is getting licensed and tracking down people that are owed, payment and things like that. That is not what our understanding of what investors want. Investors want a passive investment. You are investing alongside the entities whose job it is to exploit the copyright. You're just collecting alongside of them without having to do any of that extra work. Most of the investors on our platform don't have the industry context or the experience or the knowledge to exploit a copyright, even if they had it. So again, some do, right? There are some from the music industry that come in with that expertise, but by and large, that is not the typical buyer on our platform. So the copyrights don't really come into play as much. Will the return of live music festivals and gigs in a post-COVID world make a difference to return on investment in a catalog? Dayton, do you want to jump in on that one?
Yeah, I think we've touched on this a little bit earlier on the call, but generally the expectation is that as we open up, live music is going to return. At some point, you're going to start to see those royalties get realized. I think it's just a question of at what rate live music festivals start to come in through 2021 and 2022. But as we mentioned, COVID took that live revenue money completely out of the distribution pot. So putting that in is going to have a meaningful return on any sort of distributions that are made later this year through 22 and then to 23.
Great. All right. Last few questions in advance that were left. Will you guys have a referral service for financing? I'm not really sure what that means. The only referral service we have are for artists who have utilized our platform to sell royalties that they can then refer other artists who may want to do the same. Other than that, we do not have a referral service. See here, and then the last two I think we've addressed. Limited funds, what's the best way to invest? Find the lower cost catalogs on the exchange by using the filtering options. And then the question is, with this investment, would I be receiving royalties from the artist project I paid into? Yes, is the short answer. You're buying royalties attached to whatever portion of the catalog that was made available. So as that catalog earns, you would collect those royalties. I am now going to switch over to some of the things that were left live here. So thank you for leaving your questions. How does Royalty Exchange define a verified investor? Is that based on SEC standards of accredited investors? No. A verified investor is someone that we've spoken to and had go through our process of answering certain questions and verifying the ability to financially, pay for the assets that are available. We have sometimes a lot of fans that just get really excited and interested, and then they realize, oh, wait a minute, I need to spend $150,000 on this catalog, and it kind of throws them off. So the verification process is meant to just verify that you understand that these are real investments with real money behind them. And it's not an accreditation process. The only time you would need to be an accredited investor to participate on Royalty Exchange is in the occasional private syndicates that we make available, which are basically private placements. We haven't done one in a couple of years, so it's few and far between, but when those are available, that's the process. Let's see here. Once I purchase a royalty, how can I resell it, and where? And how is the market for such resale? So the only place that we know of that you can easily resell these would be on our marketplace. There may be some private transactions that could happen outside of that, but I'm not familiar with them. But the exchange would allow you to put a list price, say, hey, here I've owned this, I've collected money, here's the list price, give me your best offer, and you can field offers from other investors.
And on that, I mean, it is your asset. If you had a private buyer, you certainly could sell it to them. But I don't know of any other place to find it where you're going to get in front of 20,000 other investors who would be interested in it.
Exactly. This is an interesting question. If I would like to invest 25 million or more into music royalties, is this possible? Yes. It probably not in one chunk. I'd have to check the exchange right now to see what the total value there listed. I think I don't even want to guess, but it's not quite 25 million. I know that much. But yeah, you could go into the exchange and just make an offer on every single catalog that's in there and deploy, easily, upwards of 20 million if you wanted to. That's one way of doing it. The catalogs that we offer are usually in a sub $1 million at a time type of catalog. There are other ways, but with us, it's basically it's buying each catalog as they become available. You can leave a standing order. So we do have a standing order feature where you basically type in the parameters of the types of catalogs that you would be interested in buying, and then you would set the limit to how much overall you'd want to spend either on one or 20 such catalogs as they come into the system. And then we would automatically match those to new assets as they come in for kind of an automated investing process. That is a possibility, and that might work, but that's the best way I can answer that question. Can a company buy royalty assets? Short answer, yes. Rob, is that pretty much just be an LLC, or they can just register as like an investment company and so on, correct?
Whatever type of company you have.
Yeah. So yeah, there's no real distinction with us there.
Trust,
Is the best,
IRAs, all that.
yeah, trust, IRAs, everything. Is the best way to boost revenue and return it to get the songs more sync fees, assuming that someone has the contacts? Yeah. So again, these are passive investments. You own it. You don't have the right to license this music to others unless you actually bought the copyright. You're just collecting what it earns based on what others have, what others are doing on your behalf, the publisher, and so on. As the investor, you are not charged with doing this activity yourself. Let's see. What happens if you buy an asset with a life of rights of 10 years from BMI and it is supposed to revert back to the original artist in 5 years? How would you renegotiate that case? Well, you wouldn't. That wouldn't happen. We would only list an asset for the lifetime of what you would be able to collect. If it's shorter than that, like we as part of the process, Rob, you can maybe jump in here, but as part of the process, we evaluate all of these things. And if there is something that has the possibility of being reverted in a certain time frame, the term of the investment would only go up to the point of that potential reversion.
Correct.
We've actually had these happen before, and we make a very firm point of conducting it that way. So here we go. How are the listings vetted for accuracy and mitigating fraudulent posts? Robert?
Yeah, so the first thing we'll do when a seller comes to our platform is do an asset check. Make sure we don't see any liens that pop up, and if there are, then they have to be addressed either before or through the closing. We'll also contact the royalty distributor directly. So all the data that you see on any of the auctions will have come directly from that royalty distributor. A part of that process is to ask the distributor, are there any issues on the account, any encumbrances, any garnishments, any disputes. So those questions get asked at the outset during our due diligence process before the asset makes its way to the marketplace.
Great, thank you. Another question here. What is the main reason large artists will sell, and what does the process look like? Do artists come to Royalty Exchange, or do you seek them out? So why they sell is really a number of different reasons. Some of them are doing it for estate planning and tax purposes. Some of them are just trying to raise money for a particular project. Sometimes they want to record a new album and don't want to take an advance. There's the number of reasons why anybody would sell anything is at a multitude. I mean, there's just so many different reasons why people come to us. What we offer is an option they didn't have available to them before. That is why they come to us. They come to us because previously their only option was potentially to take an advance, which put them in debt. And this is a different model that allows them to retain their rights, not give up their copyrights in return for an advance, and take more control over their career. So that's the reasons that they come to us. In terms of how, some do come to us, some seek us out. You type in, music catalog sale, and we're probably the first thing that you'll see as a result. So they'll come to us that way. And yes, we do a lot of prospecting ourselves. We reach out to various organizations that work with artists, and many of the artists that have worked with us tell and refer us to their co-songwriters and their other partners that they work with in the industry, and we get a lot of referral traffic that way. Is there any discussion of providing a preview or tease of upcoming listings on the exchange? Potentially. I am personally in favor of that. It's just a matter of the timing around these things can be a little bit hard to manage. And so I would like to see that happen, and it's something that we're going to try to explore. But generally, the idea of artificially withholding an asset available to investors is kind of hard to justify at the moment, because usually once something posts, there's immediately bidding activity. So we don't want to make investors wait any longer than necessary. But this is something we are looking at and exploring. Thanks for asking. All right. If you are interested in a past or closed listing that has not been relisted for sale on the secondary market, do you ever broker deals on the back end? No, absolutely not. Everything is available in the marketplace. It's the only way we do it.
What we do in those instances, we'll have people reach out like, hey, is this on the secondary market? And we'll say, sorry, no, but we'd be happy to let the owner know that there is interest, and if they wanted to resell it, we'd be happy to put it on the marketplace. So that if you are interested, we can at least tell the seller that, or the owner, that there is interest out there, and maybe they'd be interested in putting it back up.
All right, great. And then, we're through the Q&A portion, but I do see that there were a few left in the chat, which again, is not the best way to leave your question. It's harder for me to see. But basically, no, this is not pre-recorded. This is live, and you will get a replay after the fact. There's a question about whether if I buy something, can I then sell it in 3 portions after the fact? How does that work? If someone buys an asset with us, can they split it up and sell it in smaller portions later?
Yeah, if it's staggered, we wouldn't facilitate a deal where you just sold like 101% interest all at the same time. But if you bought 100 and wanted to sell half of it after the fact, you're welcome to do that.
But that would need to be as an auction, correct? They wouldn't be able to do that on the secondary market?
I don't know what the tech capabilities of doing that are on our end, but there's nothing, I guess, legally stopping them from being able to do it. So if we can't do it from a technical perspective on the exchange, then we would do an auction.
Okay. And then the flip side of that is, and I think I know the answer to this one, if I was an investor and I was looking at the assets on the exchange and I wanted to make an offer for half of the rights that were listed, could I do that? I'm pretty sure the answer to that's no.
No. What is listed is what's for sale. So the percentage and the songs, and so we don't break up assets that are already listed and originated.
Okay. There's another question in a couple of different places about fees. Again, the only fee you pay as an investor is upon close of the sale. If you buy an asset, there is a one-time marketplace fee of 1% of the closing price, a $500 minimum, that simply covers the cost of administering the payments for you going forward. That's the only fee. There is a all access investor membership, which is a optional premium membership tier, which gets you monthly insights reports. It gets access to our analyst benchmark, pricing guides on each listing, some discounts to the marketplace fees. For instance, all access investors do not pay marketplace fees, and some discounts on our commission if they choose to resell. Again, it's an optional membership tier, but other than that, it's just the 1% marketplace fee. Let's see here. That is, I think, all the questions. There's a comment in the chat, but it's not really a question, so I'm not going to address that one necessarily. So thank you all for taking the time today. I hope we answered all of your questions. Please do look for the replay if you'd like to hear any more of these questions. And if you ever have any questions that we can answer for you, please send them to investors@royaltyexchange.com, and we'll be happy to get back to you. We do these every month. You can attend as many of these as you like, and we'd be happy to see you again in the future. So with that, thank you very much. Have a good day.
Thanks, guys.